my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video will talk a little bit about the Fed, whether anyone really cares and what the effects are going to be. Markets seem to be in one of the biggest doldrums I've seen for a while. Let's get into tonight's video. Well, folks, welcome. It is Monday. I said there won't be a video on Sundays, but I will try to come up on Monday. Not a lot going on. The markets are really just kind of chopping in a sideways range, not a lot of features of any sort, and I don't expect they're going to come up with anything big. We'll see. The Fed's be meeting on Wednesday, and my plan is that we will be live during the Fed meeting. So on Wednesday, there won't be an evening movie, but there will be a show on during the Fed. So there won't be any kind of stream during that night. So we'll do today, tomorrow, and then tomorrow night, and then Wednesday, and then Thursday, and then we'll start winding toward the big Santa Claus. So we'll see what happens here. I don't expect to have much of anything occur here. I don't know what would trigger it. There's really no significant news or anything coming out or anything that's likely to happen that we already don't know about. And let's face it, the Fed decided what they were doing like 4 weeks ago when the government was shut, right? They had a lot of time on their hand, didn't have any data. They just kind of hung around. They've known, like I said, what they're going to be doing for a while. As far as the newsletter goes, I'll give you exact schedule when we get in there toward the end of the week, and what the holidays are going to look like and all of that. I am going to start working on my annual report here probably this weekend is the plan. I'm actually anxious to put that together, see what I come up with. I've got some preliminary things done, but most of it just laid out and things that are being considered to make the cut for the newsletter. So let's we'll probably set up tonight. I don't really have a riff or anything. Usually I'll have something to talk about. I don't see anything. I think we're just going to be kind of walking into the Fed meeting on Wednesday, and we'll see what we get. Hopefully stumble across something that will trigger some sort of expectation. As it turns right now, we're just trading right at the highs of the year. So we're trying to go out maybe with a little bit of a burst, but when we go through the configuration and patterns, it looks like we're going to fade a little bit into Fed Day. So we'll go through all that. So it should be a fairly quick session. If you guys have some questions, then put something in the timeline. Maybe we can fill some gap at the other end of things there. So let's go ahead. I've got let me get a couple things set up here, and we should be able to bring up, and we'll go through the database. I'll go through the weekly since I did write about it last night, but let's go through the weekly database. So let's go ahead and take a look there. Okay, so the weekly database up here is right now at 65.69%. This is something I talked about last week when we were talking about the database. We're in that 60%. This is the sweet spot, above 62, below 68. That's like the Goldilocks point where not too hot, not too cold. It's just right. These are very sustainable moves right now. We have 7 sectors long, so it's somewhat narrow, but we've got some decent traction that we've had on some of these. Let me zoom out so you can see this. But uh, we've got we've got basic materials, capital goods. We got consumer non-cyclical, energy, healthcare, technology, and transportation. And you can see we've got, for the most part, a lot of these segments are only, the sectors are right now, the longest one out there is capital goods, which has been long for 141 days. Everything else is in 45 days and actually even more recent. So these are new sector buys. And if you look here, this is what I want to point out, is that the current duration is 30 of 146. This is the longest one, as I mentioned, it's very close to mature. And then everything else is new. 15 of 562, 50 of 316. And you're very early on in these sector rotations. So there's a lot to go there. And then we've been seeing a rotation in the database as far as the individual symbols go. And they've been staying well above. We were up even in the 70 percentile range at one phase, and then we're, looking right now at 65. This is very sustainable. Really, above 48% is good, and there's not likely to be a lot of movement here. We'd need a pretty good shock wave to move this down a little bit. You'll see when I go through the technicals and the quantitative, it does look like there's a little bit of softness coming. Looks like there'll be some potential tests of some support, but nothing substantial or material to the markets from this point. Right now, we're just coasting on in to 2026. And like I said, I'm anxious. I'm not going to talk a lot about my expectations right now till I solidify for the annual report and the outlook, and then I'll be rattling about it all the time. So let's take, like I said, there's nothing here. Let's go over to the short-term database real quick just to take a look at that. That was the weekly. Right now, short term's back over 44. We were all the way down to 18. It's come back. We've seen some decent rotation. We've got 9 of the 12 sectors long right now. And most of those, you can see, are in the single digit. Let's see what this is over here. Healthcare has got the longest position on longest, meaning it's held the longest, 81 days of a typical 45. So it's double held that. And, we're looking at a 15% gain on a sector level on healthcare, which is one of the biggest sectors out there. Let's just go ahead real quick and let's take a look and see how many symbols are in that. Yeah, so there are 262 total symbols in there, and 55.73% are long. So we've got pretty well represented. We've got healthcare facilities, you got major drugs, and then biotech and the medical equipment are, they're actually right now, as of today, being sold as of tomorrow morning on the open. So those are 2 exits. So we went from a total of 4 right now. So we're just looking at the group level here. So it's starting to lean out a bit. So, but this is more year-end rotation. Possibly we'll get into, I may talk about this in the newsletter, so you want to make sure you go to kendallreport.substack.com, get the newsletter there. And while you're doing that, I'll just do all the advertising here. Make sure you get the indicators because they're on a deep sale right now. And I believe that TradingView still has a big sale going on. We'll be starting the Inside Circle right after the first of the year. I'm working on all the details on those right now. So there's a lot going on, and that'll all be done over on our Discord. And by the way, if I'm not going to say this right now, I'm going to put something together that I'm going to have you folks fill out. I'm going to put a form together because a lot of you that bought the indicators never signed up for the Discord. You may want to be getting into the Discord now since there's going to be a lot of education going on over there. All right, so back to it. Let's go ahead and let's start to look at some of the. There's a couple things that I'm gonna want to take a look at here, and we'll go through all the technicals. Then, if you have some questions, let me know, and we'll go through some stuff. One of the things that's happening here on the technicals is the PPM1 is rolled over. I saw this coming last week. Those of you that don't have the indicators, or if you do, we're about to take out the first derivative here, which tells us that there's going to be a serious challenge to the 10-day moving average, and we still have some residual bullishness coming in here on PPM2, so that's going to be right at the 67.87, and right now we're trading at the 68.66. So we're about 80 points above that support level. So we could very easily pull down into that. We'll see what kind of setup we get as we come into the Fed meeting on Wednesday. That's going to be the primary stimulus. There's not really a lot of other things that are going to drive anything right now. Everybody's waiting for that. And I should have talked about that. So let's go ahead and talk about that right here. There's one of I don't think anyone cares what the Fed does right now. I think with everything that's going on with the Fed and Powell about to be gone, I don't think anybody's that concerned with any major moves. I don't think Powell is going to do anything silly here. They're just going to walk down this methodical path. And, will they lower rates this time? I believe they will. Does it matter? I don't think it does. Matter of fact, maybe I'll bring up, since we'll probably have some more time, I'll bring up the 10-year, because the 10-year has bounced all the way back almost to 420 again. And I keep telling everybody, they keep thinking, well, they're going to lower rates, so the front end and the back end of the market's going to go down as far as the yield curve goes. And that's not going to happen. So more on that in a minute. But all of the PPMs are just very non-committal. There's not really in any sort of what I would call, an uptrend or anything that you want to do there. So what we're going to take a look at real quick is these numbers. I want to just zoom in a little bit. We've got the 40-period moving coming up here. This is one of those times when you're looking at the moving averages where they're not in what I call normal organization, meaning that typically if you're in a trend, the shortest term average, like the 10, would be on top, and then the 21 and 40. Right now we've got the 40 on the top. It's trying to roll over, and the 10 and the 21 and 40 are down below. So the 10's on the top, but the 21 is the lowest in this pattern. So we're looking at the potential for this thing coming back down here, like I said, around the 67.70 level. The red dots are showing that we still are going to hover around this 10-period moving average, but there's nothing here. So you should be able to fearlessly trade these ranges, folks. If we look at where the market grid is here, hopefully you can see this up on the top there. Yeah, so if we look at where the market grid is, you're looking at right now a range of exactly 100 points. 68.14 to 69.14 is the top end of the grid, but we're probably looking at S1, S2. Let me do something here while we're talking. going to run one of these sheets here real quick. So this is the old Bitcoin from last night. Let me run this sheet. It should run, so I'll go ahead and start that in the background there. All right, I'm going to leave this over here for the moment. Okay, so nothing, I'm telling you, there's nothing earth-shaking coming. The absolute extreme that you'll see in this pattern is to come down to the 40 period moving average, which would put us down here right now. That's going to be, your green line be 67.94. So I mean, we're locked down in this range. You see this contraction. Typically when we see the volatility squeeze down, then that is the prelude to the next move out of here. There could be something here, but it looks like paint drying here. As at least end of Wednesday, we'll see if we can get a little bit of bounce. Maybe Powell, somebody will say something, but I just don't see anything coming right now. I think it's probably the most advertised meeting. We have these all the time where it's the most advertising Fed meeting ever, right? So let's go ahead and just kind of work through the indexes here. There's a little higher volatility on the NASDAQ here. As far as that goes, the red dots are projecting up, but you can see we're ways off of the high. I'm going to go back to the ES just for a second here. What's happened is we have much lower volatility on the S&P. When we get to the NASDAQ, then it's got just a bit more vol here from the high-low. It does have a better slope, so the NASDAQ's going to keep driving this market. We can't get out of that. So you can see all of the indicators are still remaining a bit positive here as we go. So don't expect to see anything really change a lot. So the market grid, you should be able to trade off the, that's why I'm running this sheet over here. It's running right now. I'll show it to you once the S&Ps run. But all of these ranges are going to be constricted. So if you get the Substack, then those sheets are going to be great trade setups. The probabilities are there. There's typically 1 to 2 trades on every sheet. So on ES, on the NASDAQ, and then gold and on Bitcoin, there's typically a couple trades across the board on all those sheets that come out every night for $8. It's not a bad deal. So let's go ahead and yeah, there's nothing here, folks. I knew it was going to be pretty boring stream, but I wanted to come up, and we'll try to make it interesting. Just remember to make sure that you have some questions for me, and that will fill in a little bit of a gap once I get through everything. I think it might have run, so let's go ahead and bring this up. Yeah, so this is pretty much what we're talking about here. So everything has been updated. So let me zoom in. So here's what it's telling us. It's pulling back, holding high target 2. So this is just that, describing no downside targets active, bullish structure intact, low volume, consolidation. That's where we are right now, and that's what's likely to go on through tomorrow from that standpoint. Pattern analysis, pullback consolidation between S1, R1. So this what I was alluding to. So I let the sheet just do the work. These sheets are really handy especially if you're a day trader. That it basically is telling us we should stay somewhat between S1, R1. Then upside target still has 69.21, so there is a downside targets. There is none. And then there's the commentary here, which is talking a little bit about what is likely to happen here. PPM momentum is starting to drop, and that's just because it is the season, right? So this is a seasonal tendency for everything to flatten out. Even with the Fed meeting in here, I don't see anything happening. By the time we get to, like I said, we probably have to the end of this week of any kind of volatility that we're going to have, and then maybe 1 day, 2 days next week, and then maybe a final day as we push into year end and to the settlement for the year. So just know that is that's what's going on here. Looks like here R2, there's a 75% probability, 78, 70, 76. I'm just looking at my trading monitor above. Yeah, so there's just S1. So this is the range. S1, 68.52, and then on the upside, 68.76, maybe an 89 print. Yeah, but I don't know what would even do that right now. So like I said, you should be able to blindly just come in and trade these ranges and just scalp all you want. So just that looks like what we're dealing with here. Let me just slide this off over here. Okay, so let's go ahead. We'll go through the normal markets, and then if you have any questions, then we can do that tonight. This is interesting. I've been talking about this. Gold is starting to get a little heavy here, and you can see we got some new fib targets on the downside today. We got 4,047, 39.50, 38.90 on the downside here. You can see all of the PPMs are going. So if you don't have the indicators, what these dots are the forecast of the loss of momentum that is being projected. You can also see that, you know, we've got these fib targets over here. So it looks like gold wants to weaken a little bit. Doesn't seem like there's much more there. I have not looked at it, so what we'll do tonight, since we have plenty of time, I'll go ahead and do silver as well. I'll throw silver in there, but gold's starting to weaken. I suspect not. We'll just take a look. I won't guess, but so we're definitely seeing, and the key numbers that you're going to watch on the downside is that. Let me just get this. It will be these numbers right here. You're gonna be looking at the bottom of the market grid, 4166, and then we're also going to have I'm just trying to find the numbers here, 4180, 4162, and 4130. Those are going to be your downside targets here. There are sometimes we'll get this kind of configuration where we have upward targets as well, but the indicators are not confirming the directional move. So a lot of times you'll get, those of you who have the indicators, you have the fib target. So there's algorithms within the indicators that will recognize the high-low points and project these Fibonacci targets. And sometimes you'll get the targets, but you don't get the momentum or the direction movement confirming. So when you get that usually even though today was the first day we've got the downward targets, those are probably the most likely targets to the downside right now. And there is good support at the 21 and 40. So it doesn't just plummet through there. But it definitely, with gold, the kind of run that it had this year, we could see it actually see some pretty decent profit taking as we go on. All right. Yeah, so silver is kind of doing a couple things. I went through the silver the other day quite a bit. We still have an angle of attack upward on here, but we are very close to breaking down on silver. Nothing drastic, probably to test the 10-period moving average, 58.60, and then the possibility of getting down to probably around the 50, 56 and a half, $57 range. Let me throw up a weekly since this thing had such a giant move. So this is probably the chart that is kind of, I don't know, we'll just say it's eating at me a little bit, in that it looks like to me that we're going to get a sideways movement, and somewhere up around where my cursor is, 58, between 58 even and 58. If we break below that, then we're going to start to head a bit lower. Chances are we'll come in to this 10-period moving average, and possibility down the road a little bit of getting more into this $52, $56 range. This thing is not in a runaway. I know it made an all-time new high. I talked about this the other day. I have no idea what makes people get bullish at all-time highs, but a lot of people do it. It seems to be a thing. Well, that's, yeah, I don't know about what's happening here. Let me, my switchboard is not working again. Anyway, all of these are pointing down into March, into lower prices. So I suspect if we're lucky, we can hold above these ranges here, set up some decent formation. That would be the best on silver. If we look here at this parabolic move that we got, then we're easy, probably heading back to 46. The way things are looking right now, I cannot. Let me do one thing here. See if I can find another contract. I'm trying to find this one contract that has one more time. I'm trying to find this contract that has more data. Oh, well, I'm not finding it. I was trying to get the algos. I'll just tell you, I can't find the exact contract right now, but the algos that, when you see the monthly algos, they are suggesting that this is a very climactic move at the moment, and that there's going to be a lot of work done if it can hold together some of the support levels over the next couple months, which would be the 1 month. That's going to come up here into 46, 48 bucks. So there's probably some consolidation to happen here before the markets try to move any higher. And a lot of things is really looking very, very toppy at the moment. I went through that the other day. let me just try one more time here. Yeah, I'm not finding it. Anyway, so let's go ahead and just kind of go on. So let's do Bitcoin, and then if you folks have some questions stuff, I'll go back on the timeline and we can talk a little bit about that. So we'll stay with this monthly at the moment with Bitcoin. I still think we're a ways away from bottoming. I think we see 60,000 on this thing. Michael and Tom cannot save this thing. It's rolled over. I believe this was a giant distribution top that occurred here, and I think it's going to take a while. If we're lucky, we can hold here around 73, 78, but that's going to be the real test. And everything's starting to roll over into a fairly negative mode. Matter of fact, let me just bring this up so you can see this. Yeah, so PPM1 still positive 0.57. This is a monthly chart, and we still have a 1.03. So there's still a relative positive zone here. We'll probably stay below 100 and somewhere around 90. And if we do break this 80 number, then it's going to go out. Everybody, Tom and Mikey and all these guys have already proclaimed that the low is in place. Maybe it is. I don't see it that way. Let's go to a weekly chart here real quick. So weekly's trying to set up some positive, but look at these numbers. PPM1 minus 3.2, minus 1.18. These are whole integers, not just 0.25 for a trend. And then the very bottom one here is we still have a slight positive on PPM3 at 0.11. But these numbers up here, the 10-week, 21-week moving averages, these are very substantial downtrends that are in place. They may hold here, we'll see. But right now we're looking at more like a hesitation, maybe a right shoulder, and it's possible to get down very close to this 200-week moving average here. Let's take a quick look since we've been so deep. Let's go ahead and go into the short term. Look at this. We just got a new Fibonacci target to the downside. So we're off 430 right now, right at 90,000 roughly. But if we look down here, the new fib targets right now are 70,500, 61,182, and then 58,000. That is the 200-week moving average. So is it going to go there? I don't know. It looks like right now on a daily that we're stabilizing a little bit. So I think we could do some more work along these averages. That it looks very weak right now. And of course, let's come back up and I'll look at some of your questions here. But of course, Tom told you it's going to rally $40,000, $35,000 by year end, and a couple of weeks, and all of these crazy predictions. I don't know where this guy comes up with his numbers. I guess he's just talking his book. there's no relevance to anything that he's talking about that's even close to being right. But all of the Bitcoin bros are going to grab onto it and believe him. And, you know, Michael Saylor's a genius. Maybe he is. We'll find out someday. I hope I'm around to. I've told everybody you can finally buy Bitcoin the second Saylor goes down the tube. All right, let's see what kind of questions you guys got. Yeah, it should be a good night, Monday Night Football. Man, that Ohio State Indiana game was that was a hard fought game. That was serious defense there. Okay. Yeah, that's why I'm telling everybody, you know, go to kendallreport.com/indicators24 and get the indicators and get signed up. And we're going to get everybody into the, there's a couple things happening. Working on finishing up I just showed you those sheets that run. You'll be able to run those sheets. I can't wait to tell you all about that stuff. Let's see what you folks have got. Iron Trader's busy. Yeah, there's be a market mover. Yeah. Not very likely. Let's see here. Today's crude net gas scalp. Okay, good for you. Yeah, Todd saying silver's going sideways. I think it's sideways to down. I think it's got to correct. I think it got way blowing up. Let's see here. Yeah, I mean, it's probably a decent, we're about the low of the day. Somebody's asking about, we just hit 68.63. It's trying to bottom here, but it's all going to be small trades here. Yeah, I actually just put a few on right there. Thanks for giving me a heads up. Yeah, we can do quick copper. Somebody's asking about copper. Let's see what else we got here. Yeah, thanks for the Ohio State fan. Yeah, I think there's, I don't know. I'm getting a little full of myself. I'm thinking we're going all the way. Signetti has got these guys tuned in. It's crazy. Let's just see here. Buy the rumor, sell the fact. Yeah, it'll be interesting to see what kind of stuff we get out of the Fed. I don't think there's anything they can say. Just looking through. Yeah, you know, let's put it this way. I think that whether BTC, Ponzi, has that really been revealed? Maybe. You should have gotten an email. I guess it's going to be like God's Girl 7. Send me a email info at credit info at kendallreport.com and just let me know you need that. Yeah, US Stat's not going to be downgraded. There's no reason for it. We got what, 10, 12 trillion dollars worth of investments coming here next year. So I do sell the database. You can sign up for WaveTech. You can do that. It's $97 a month. It's prorated. You can do that. Yeah. Yeah. Oh, I see. Boy, you got me leaving forever. I hope that's a while. I have no idea what's going to happen with that. Um, I'm trying to do some things that will give you a longer access to that. Let me just see here. Oh, okay. All right, Joe. All right. I see what you're saying, though. I misunderstood what you're saying. Yeah, the carry trade, it probably is not as big as people are making it out to be. Well, we'll see. I think there's still some upside on the end. So, what was it? Somebody asked me to cover copper. So let's do that. Let's go over and do copper. Okay. Yeah. So, see, this is the thing that I'm trying to say with silver, copper. You know, these things are played out. Okay, this is one of those little stair steps sideways, and looks like we're going to go sideways, but the momentum looks like it wants to completely fall apart, or we get into a downtrend. I don't see that yet, but I do see it consolidating and ultimately, excuse me, ultimately going down to maybe down to into the 21 period moving average. But all of these indicators are bad. So I did on the silver the other day. I was looking at these three spikes, and I just not impressed with the market structure for longer term trends on silver. I don't know that copper's the same way. I need some time. I wouldn't want to bore you guys with me thumbing around because there's a million symbols in here. But if we come up here, it's just these type of patterns. This is not how a bull market sets up. Now this could dissipate and we consolidate here and then maybe get another kind of refresh to get this thing to rally. But this thing's pretty played out on the copper. It, and this is the daily and the monthly. Let's just go over to a monthly real quick here. That will be, yeah. So not a lot of data on this I got here, but this is kind of a stair step. I don't like when we get these kind of formations here and then it breaks out. So I think everything kind of comes back in eventually to the top end of this range between 900 and maybe 850. And maybe from there, with some time, we could be ready to go. But this is just like too more of a panic that bid prices up. And this is monthly now. I said if anybody knows any symbols that have a lot of data, then if you tell me, I'll do that analysis. Let me just look here. Yeah, it's interesting, Joe. People have been asking about my end of life plans for about 20 years now. So I've been defying gravity. Hopefully that will continue. No, and you're not. I appreciate it because I've been asked that a million times. The problem with is no way to. Yeah, so let me just come up. Let's have a quick discussion about that. So from the standpoint of the database, it just doesn't run itself. There's servers, there's all kinds of maintenance and things of that sort. Probably cost right now, it's probably $50,000 a year to maintain those servers. And so that makes it, yeah, someone's got to pay the piper to keep that thing going. Somebody's going to want to keep it going. Um, I have talked about before maybe having some kind of like customer owned environment or something, but you got to have somebody who knows how to do it. It's really not that hard to maintain, but it does have to be maintained. So it constant cleaning and just there's data garbage that gets in. We've got everything for the most part built so that when we get the data, like tonight, it automatically goes and cleans any bad data. It does most, I would say 85% of everything. Once in a while it breaks and you have to maintain this thing. So it's a bit of a pain in the ass, and the same guy that built it has been maintaining it for over 20 years. So it's actually 20, 25, 26, almost 27 years the same guy has been maintaining it. It's not a big deal, but if you know what you're doing, you do. And you have to pay the data vendor, which is another $20,000 a year to get the data. So, yeah, I'm open to conversations about that for sure. I'm hoping that I have a few more years. I actually have a plan to do one more thing with that database before I leave. But as I could attest to right now, after losing my wife recently, and she was 20 years younger than me, anything's possible, and I'm certainly aware of that. But I appreciate that. Maybe when we get into the Discord room all the time, we can have some conversation. Maybe somebody will come up with that. So I'm positive on my trade I put on a little bit ago. We'll see how far it goes. Matter of fact, I'm just going to put an exit up there. So, okay, let's see what else we got. Yeah, I would say everything's a bad investment. I don't even know what the word investment means. I've been a trader all my life, so let me just look. Yeah, Joe, just to kind of complete with you. Yeah, maybe you should reach out to me. You have those skills. Maybe that's something you should reach out to me and we could talk. Um, yeah, I've seen your username in there for sure. All right, we'll do a couple more. What time are we getting to be? Let's just do it. We'll do. Um, yeah, I guess Netflix trying to take over the. I mean, this thing's already rolled, but this is sort of what I was talking about in when we're looking at the. Let me bring it up so you can see it. So when you look at this Netflix, I mean, we got targets way down here at 45 bucks. Here's a pivot right here at 88. Yeah, so you know everything is already topped out. This is monthly. Let's roll this over to weekly. This will give us a better look. But look at all this. Everything's just in a downtrend here. It's trying to bottom a little bit here, but look at the ppms down here. They're just all looking at bleeding the all the momentum off of this thing. Let's try a LAU. Somebody was talking about that. We'll do a few more. Oh, Centrus. So, weekly Centrus, this thing's just bleeding too. It's probably going to come into this wedge, rise along this 40 period moving average. But a lot of these things we got an RTX sell signal and it's been down ever since. So, yeah. There's a lot of consolidation, and matter of fact, all we did was break out. This is exactly what I was talking about. A lot of these patterns, they just break out and they come right back into the pattern. So now they're probably consolidate here. It will be probably another 3 to 6 weeks, maybe as much as 2 months before we'll be able to determine whether there's going to be any kind of breakout. It looks like this thing could be down into March or something. Certainly have a cap on it until then. Yeah, I think certainly the copper miners are in better shape than the metal, but they're also just kind of going to bleed off. There's an argument maybe even for a 5-way pattern up. I think a lot of this stuff is just completed, and people tend to want to, sort of like the, let me see if I can get, I mean, these stocks have been doing nothing this is 21 for years, and finally it breaks out. Probably going to come back in a little bit, probably back, towards some support around 54 or something like that. But the party is probably going to consolidate here and see if we can get some further downside. What time we got? 52. We'll keep going. Yeah, I think I agree with that. It's a stupid acquisition. Yeah, sleeper cell. Do you know the symbol of that thing? That Tom Lee's company? There doesn't seem to be much here in transports. It's probably going to consolidate. This thing has just been locked. What year is this? 22. This is weekly. Let's go long term here. Look at this. This is interesting. So we got some big long-term targets up here. They're no longer calc, but we've got this big consolidation here. It's an interesting bounce off the 21. Let's see how far back. This is to 1970. I'd have one more hurrah, maybe 22,000. We got some targets here at 19,245 and then at 21. No. Somebody's asking. No, the database, $97 a month for WaveTech. The indicators and the data sheets are going to be there's a membership and then there's a $1 sheet, or you could use your API for Claude, and that'll be a lot cheaper then. If people don't want to use it, that's it. Let's do lumber. I actually want to see that. Got to find a better symbol. Give me a symbol there, somebody. Yeah, Todd, that database has been guiding me for a very long time. Yeah, we'd like to do lumber. Anybody got a lumber symbol? I'll do Home Depot while that's going. Yeah, it almost looks like that transport index. This to me looks like a potential distribution top coming in here, but it's probably just going to go into one of these untradable configurations. So we do have some new fib targets, 492, 550, and 595. LB1, thank you. Just don't see it coming up here. LBR. Here we go. See, this is just that contract. LB. Just can't get any long data out of it. Sorry. Yeah, so that's one of the things that will happen here. Somebody was talking about love Claude. I do too, except for recently they had some issues. Claude is so you had to rewrite each iteration. So I'm going to come up on screen for a minute, then we're going to call it quits here. All right, so on Claude, one of the things that you want to do, I had to just recently taught my brother this, is you need, when you get a good working version of whatever it is, you can download that iteration of that, and you want to save it and put it in a Word doc, put it somewhere, save it to itself. And then what you want to do is you want to take, before you move forward with that, is you want to build a template. So you'll go into that file that you're running, whatever you're running, and then say, I want you to make this a template and do not change the following items. And you want to say, do not change any of the structure. And you go through the whole thing and describe it, and then tell it to lock it down and make it a template so you can put different types of data into it. Try doing that, and also keep version control. When you get one that works, take it, put an extension. I usually save everything in TSX files, and then you can kind of build off of those TSX series that you're building. And I usually do React dashboards. That's why TSX works. So hopefully that's helpful to you. All right, folks, that's going to be it. Pretty kind of a nothing session tonight. There's nothing to be excited about that I see anyway. So we'll see what happens. On Wednesday, I'll be live during the Fed, so I'll come up then. There won't be a video on Wednesday night. There will be one on Thursday, and then we'll go into probably holiday mode. I'll announce as we come into the week. So a couple things you guys got to do is, one, if you haven't got the indicators, get them so you can get into the training and all the stuff I'm going to be doing on Discord. So that's kindlereport.com/indicators24, and then you'll be able to get into the Discord, and there's some other things that we'll have to do on Discord, and then get the newsletter. I think that's mandatory if you're hanging around. It's $8 a month. You can pay for a full year and get it for, I think, $6.50 a month. So you can go that route. And so you can go to kindlereport.substack.com. Anyway, folks, thanks as always watching. Wasn't a lot of folks around, but we're getting into holiday mode. So anyway, thanks again for watching. We'll talk to you soon.